Hi fellow traders, I'm making this video to share my EUR/USD analysis. Before I start talking about all these technicals and these lines and these ABCDs and what all we have on daily time frame and 1 hour time frame, I'll give you a brief of what recently happened ever since release of FOMC statement and the interest rate. So nothing changed in the interest rate as expected, and there was one hawkish thing that now it's really uncertain when exactly they're going to cut the interest rate, as Jerome Powell clearly said that it is totally data dependent. And there is not one certain thing about what exactly is going to influence, whether it is CPI alone or PCE alone or labor market condition alone, because he has been asserting uh, about the totality of the data. So he clarified that the labor market condition alone is not going to play a huge role in decision making. So overall economic condition is what they are going to look at. But there is one thing which we need to understand about the redemption cap. I'm talking about the treasury securities. So recently they announced that from the month of June, they're going to slow down the decline of U.S. Treasury securities from its balance sheet, and they're reducing the monthly redemption cap from 60 billion to 25 million. And so agencies actually agency mortgage backed securities at 35 billion. This is the redemption cap they're going to maintain, and will reinvest any principal payment in excess of this cap into treasury security. So what does it mean if they're gonna reinvest any principal payment in excess? It is some sort of quantitative easing, and this is the dovish, or you can say bearish sign for the US dollar. So there is a mixed outcome of the FOMC. The hawkish is that the interest rate cut is more uncertain, and slightly dovish, or you can say bearish, is that some sort of quantitative easing in treasury securities. Coming to the last week data of um, non-farm payroll. So all the things which were released on last Friday were negative. I mean, less than forecast, or you can say worse than forecast. Not less than forecast, because I rather should say worse than forecast, because unemployment increased, average hourly earning decreased, and non-farm payroll couldn't beat the expectation, and there was a significant deviation between the expectation and the actual release data. And that's why if you look at the EUR/USD on 1 hour time frame, you can see that this was the movement of EUR/USD, although the entire market was pricing in softer labor market condition, and that's why it was already in the uptrend, you can see. And I have just drawn this horizontal line, this line, uh, right before the release of non-farm payroll, and this single candle was the result of the uh, weaker than expected non-farm payroll. And ever since then, the uh, pair EUR/USD has retained its gain, because you can see there was a downward fall. However, it couldn't go below this level, and still it is maintaining. So these are all the factors. So even though uh, anything can happen in very long term, and if we talk beyond May 15, many things can change after the release of CPI, and maybe geopolitical tensions can change a lot of things, because there are two wars going on in the world. One is Israel Hamas war, and another one, that has been prolonged, that is Russia Ukrainian war. So of course of course the longer view is like a longer view is 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 all about which one is the safe haven. So of course US dollar is the second safe haven, even though America is directly involved by supporting Ukraine and Israel. So otherwise it could have been, if it was just in different country, it could have been the number one safe haven. But gold has become the number one safe haven because of direct involvement of America in these two wars by supporting one of the two parties. However, US dollar is still the first safe haven, sorry, second safe haven. So maybe this strength of dollar can continue in the market, but we are not talking about what's going to happen in the month of June or July or August. We are going to talk about what's going to happen in a couple of days or in a week, or particularly before the release of CPI from the US on May 15. So today is May 7, and before May, we have 8 days before May 15, and what all the factors we have now on the chart. Let's see. So if we look at the bigger ABCD, which I have drawn from here, this is the ABCD, which was not completed if you look at the AB equals CD, because this was the AB, and AB equals CD would complete at this line. It doesn't mean that this is not harmonic, because for ABCD formation, the CD is not necessarily supposed to be equal to the AB. If CD is just 127.2% extension of the retracement BC from B to C, or in other words, if you measure the length, if CD is just 127.2% of the length of BC, it is still supposed to be completed, and rather it is more rather it is stronger reversal pattern, because it shows that the CD couldn't even go as far as AB, and that's why the whatever force was there in the market behind the formation of this ABCD is actually diminishing. So this is a bearish ABCD, so we can say bears were exhausted, and this is where this was completed. So you can see I have mentioned ABCD 127.2%, this line. Let me put the crosshair on that particular line, and so that area was 106.15, sorry, yeah, 106.15. So market came there and then returned. Another factor which make that even a stronger support area was this smaller ABCD. You can see this is the extension here. So this is the smaller ABCD, and it was completed. I'm just gonna move it and delete it. You can simply understand by this one. This is the smaller ABCD, this is the AB, and this is the CD, and it was completed right at the very same area, which was 127.2% of this bigger BC. So there was a smaller ABCD inside the bigger CD, and that is what they together made this area a significant support, and you can see that the market return from here. So initial return was pretty harmonic and similar to the previous retracement. However, market couldn't continue in the downtrend after this. So you can see that this high was made pretty close to this price level, and then market started going down. However, it couldn't continue, and then market started going up. But right now, what is bearish and what is bullish? Today we have one Gartley which still is bearish, because even though now upward movement is bigger than the previous retracement, and this is clear sign of bullish strength, there is still a harmony. For example, if I simply draw it here, this is the AB, and then there is a faster CD to the upside, which is making a Gartley. But is this Gartley going to be powerful? No. If Gartley was just a bearish pattern, this should have been rather slower movement, which would show that the movement to the upside is slower. Bulls are not very powerful. But still, if we look at the overall price development, besides last 3-4 candles, the movement to the upside is not very fast if we simply exclude the Friday. So my point is, there is one Gartley today on the daily time frame, which is a bearish chart pattern. But is a is this chart pattern alone gonna work as bearish? I doubt it, and that's why I'd rather say that this bullish movement is going to continue, and probably this previous ABCD and the recent ABCD are gonna work as the reversal pattern, and market is going to take this high, which is around 108.80 area. This is the minimum target of this bullish movement. Even if we talk about this smaller ABCD, which was this one AB and then this one CD, for this smaller ABCD to work as a reversal pattern and to complete the reversal with the minimum strength, this has to be taken out. And I think there is no significant influential data before a release of CPI on May 15. So market has enough time to go and reach this area. So, and then anything can happen. Maybe bearish continuation can take place from 880 area. But right now, I cannot see any significant bearish sign besides this Gartley. Otherwise, everything else is in support of bulls. Let's come to 1 hour time frame. What I see. So, like I said earlier, that the market has retained the gain of weaker non-farm payroll. Then market retraced to the downside, started going to the upside. Again, bears came in, again started going to the upside. And now we have these two ellipses which are showing a double bottom. So this downward movement has made a double bottom, which again is a bullish sign, and market is moving. Right now it is at the neckline, and it looks like this is going to break the neckline. We are already in the most volatile and the most active session. This is an overlapping session of the European session and US session. Moreover, the equity market also opened 11 minutes ago. So this is the most active session of Tuesday, and if we see such kind of movement, definitely there are significant volume in the market which is driving Euro USD to the upside, and I will not be surprised to see this minimum development and to at least 880 area. So that is my view, and then we will discuss further what next. So that's all. But besides the target, let me talk about what is the exit plan in case of loss. So if we see that the market comes down, and then if the market erases all the gains which it had on Friday, and if any 4 hour candle closes below this, I don't want to rely on 1 hour candle because any small spike can come and go up. So I want to see a 4 hour candle to close below this line. This is 107.43. So if 4 hour candle will close below this, and if you are in buy positions, you should take the loss and exit the position. So now you have the target, now you have the idea of trade, and now you also have the exit plan in case of loss. So that's all. Thank you for watching.